Hello everyone and good afternoon. This is Holly live from Kalkine Studio and you're watching The Market Movers. Well, the ASX 200 is struggling for direction today, while the commodity super cycle and economic recovery prospects are fueling market momentum. Inflation expectations and virus concerns are capping the equities gains. There is a tug of war. Materials and healthcare are pulling the strings of the ASX 200, and energy and IT sector are dipping as capping the gains. On that note, let's zoom our lens on over to the market performance today and the drivers under the spotlight. The energy sector is leading the drag on the ASX 200 today. Australian energy producers such as Boss Energy, Santos, Beach Energy and Woodside Petroleum are trending lower today amid oil price downtick. Oil prices fell on Friday with Brent crude falling below the $70 a barrel mark, and its strong concerns about Iranian crude oil supply once sanctions are lifted outweigh the beat of US economic data. Let's now zoom our lens on over to the technology sector and its underperformance today. The investors seem to be turning against the IT stocks given the inflation worries. A US Commerce Department report revealed that consumer prices rose 3.1% on the year to April, posting its largest annual gain since 1992 and comfortably surging past the Federal Reserve's target of 2%. Consumer spending also surged at 11.3% annualized rate in the first quarter, positioning the US economy for strong growth and rising vaccination drive eases the pandemic's grip. Intelligence software provider Nuix hits a record low on trimming FY revenue outlook. The company now expects the revenue for the year to June 30 in the range of 173 million to 182 million, down from April's forecast of 180 million to 185 million. Nuix cites uncertainties about expected license upgrades by existing customers and the addition of new customers. Nuix has been in the news lately. Last week, Nuix shares dipped lower after the company terminated consulting contracts with the co-founder Tony Castagna. The Macquarie-backed software firm had earlier this month hit a record low after a joint investigation by several local media outlets alleged issues with Nuix's governance and the quality of financial accounts prior to its listing on the ASX. It was later reported that NXL's top management promised that the company would do better in response to the questions over its governance. And now moving on, the materials index is pulling up the strings of the ASX 200. The heavyweight Australian miners Rio Tinto and Fortescue Metals are trading in the positive territory. On Friday, iron ore futures in Asia closed mildly higher, although down on a weekly basis, on the back of persistent price control concerns in China. White copper prices rebounded as the market participants bet that the US spending plans on infrastructure would fuel shortages, shrugging aside worries about weak Chinese demand. Meanwhile, a financial research firm Citi has downgraded its FY23 earnings forecast for Fortescue Metals Group, as per the information from Refinitiv. This is in reaction to the company's delayed start of its Iron Bridge magnetite project in Western Australia. It has cut FMG's FY23 core net profit estimate by 3.9% to 4,669.7 million. Notably, FMG on the Friday raised its cost estimate for the project and set December 2022 as the new date for the beginning of production. The delay is by 6 months from the earlier estimate, and the project cost is now around 3.3 to 3.5 billion. On the other hand, Australian gold miners such as Gold Resources, Ramelius Resources, Silver Lake Resources and Grey Mining a trading high catching up with the overall gold prices. Gold ended its minor correction and rose above the key $1,900 level on Friday, as data revealing rising US consumer prices in April boosted the bullion's appeal as an inflation hedge. And now, before I share today's top ASX gainers, it's time for a short break. At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. Kalkine TV. Welcome back. This is Holly from Kalkine Studio, and you're watching The Market Movers. Let's have a look at some of the stocks that are under the spotlight today for the sinusoidal share market trends. Australia's leading grower, packer and marketer of fresh fruit and vegetables, Costa Group Holdings, is soaring high today. For the 2020 financial year, Costa delivered $59.4 million underlying net profit after tax, representing an increase of 108.4% over the prior year. The total dividend payment for the year was 9 cents per share, fully franked. Costa Group finished the 2020 year with a strong balance sheet and a capacity to continue the long-term growth agenda, with both organic and inorganic opportunities being pursued, as indicated by the company in its latest AGM update. Meanwhile, shareholder registry firm Link Administration slips as it drops KKR's bid and seeks to list PEXA. Link stated that it will continue to take online real estate company PEXA public with an enterprise value of $3.3 billion, effectively rejecting KKR's takeover bid for the unit. In connection to this, shares of property classifieds operator Domain Holdings also falls, as the company was part of a consortium with KKR bidding for 10% stake in PEXA. Link said that the ASX listing will be done towards the end of June this year. Reportedly, the board of PEXA decided to launch an IPO after a deal to be acquired by private equity investment giant KKR fell apart. KKR had offered $3.1 billion to buy property settlements firm from its owner, including a financial services group Link Administration. Notably, Link Group is the largest shareholder in PEXA, with a 44.6% stake in the company, while Morgan Stanley Infrastructure Partners holds 40% and Commonwealth Bank of Australia holds 15.3%. The IPO will see Link retaining its stakes in the company, while Morgan Stanley Infrastructure Partners will offload its entire shareholding. The third shareholder, CBA, will raise its stake to 17.4% from the existing 15.3%, according to the Australian Financial Review report. As a result, Link Group will continue to remain the largest shareholder of PEXA. And now moving on, while the healthcare sector is the leading gainer, the body scanning app maker Advanced Human Imaging hits a one-week high on a deal with Netherlands-based mental health and addiction care company Intersci. AHI's technology will be integrated into the company's platform for October of 2021. Notably, HealthHack is Intersci's preventative health screen iOS and Android app, which is scheduled to go live on June 2021 in the Netherlands. And now, before I share today's top ASX gainers, it's time for another short break. At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. Kalkine TV. Hey y'all, this is Holly live from Kalkine Studio and you're watching The Market Movers. Let's have a look at this next stock. Funeral service provider PropHigh Funeral Partners hits a 15-month high on the reorganization deal. Propel has entered into an implementation deal with Propel Investments, manager of the company, to reorganize senior management functions. Under the deal, Co will pay a termination fee of $15 million to its manager. Next up is the dairy processor Keystone Dairy, which gains as the financial year's sales more than double. The dairy processor has reported a record sales growth across all divisions, with sales totaling $50.7 million for the financial year of 2021, while representing a 125% increase over the last year. The company has reported a new contract win with major retailers in Australia and New Zealand and international brands, with more than $15 million in material new contracts signed through the financial year of 2021. Then, Crown Resorts is close to pulling together its longest stretch of monthly gains since the end of 2019. The casino operator, which has been plagued by regulatory woes, governance issues and coronavirus disruptions, is up to about 5.2% this month and set for the fourth monthly gain. Shares, which have fallen a fifth time in 2020, are now back to pre-pandemic levels, as the company fields takeover interest from Star Entertainment Group and Blackstone. Moving on, let's have a look at the key economic events lined up for this week that could impact the market sentiments. With a barrage of macro numbers likely this week, markets would be reacting more frequently than ever. From monetary policy to GDP numbers for the March quarter, Australia is set to witness a high-octane week at the beginning of June. During the week, the country would also release retail sales numbers, an indicator of consumer spending in the country. Moreover, Swiss growth numbers are also closely eyed. Switzerland, one of the richest countries in the world, is set to announce its March quarter GDP estimates. Meanwhile, retail sales numbers for Germany will also be an interesting one to watch this week. A measure of changes in sales of the German retail sector shows the performance of the retail sector in the short term. A key gauge for determining the consumer sentiment and the spending, the German retail sales are likely to contract by 30 basis points. Then the US is set to release jobs data, as analysts suggest payrolls may have risen by 6,050 in May. That is almost double the gain of 266,000. Well, that is all for now. Stay tuned for more live updates on Kalkine TV across economies, markets, and sectors. This is Holly Shields signing off.